Hi, it's Malcolm. Welcome to our first market review of 2023, and quite a confusing time. Very strange things happening in the property and the mortgage market. So you might have heard at the back end of 2022 that there's going to be a property price crash. Well, that hasn't materialised. We have seen some reductions, especially in some parts of the country, like the south, have been worse affected so far, it seems, than the north and the Midlands. But equally, we've seen properties going for over the asking price. So we're not in the realms of the 26 buyers per house that we're seeing this time last year, but certainly we've had still properties going to sealed bids and 3 or 4 people bidding on the same property. And some aspects of the property market still appear to be quite buoyant, despite what you might read in the mainstream media. Interest rates, even more confusing. So today we've had the Bank of England put the base rate up yet again, this time to 4%, and we probably haven't seen the end of the Bank of England base rate rises because we're still struggling with double-digit inflation. Hopefully by the end of 2023 we'll be reporting that inflation is back to normal and things won't be costing quite as much as these ridiculous things that you're seeing at the moment in the pubs and the restaurant, and we've seen last year of course at the petrol pump as well. In terms of mortgage rates, so the base rate is going up and fixed rates are coming down. What is going on? Well, very strange. We've not really seen this in the past either, but when the banks are setting their fixed rate mortgages, they're taking a longer view. And so they're sort of already pricing in what's going to be predicted to happen to the base rate. And of course, a new year has started. The banks have got new targets to hit as well. They removed themselves from the market at the end of 2022 because they'd already smashed all the lending targets, and all the unexpected kind of volatility in the market happened off the back of the Liz Truss premiership. So they're back in the market and lending. A little bit of a price war going on between the lenders as well. So those fixed rates are dropping whilst the base rate increases. Very unusual state of affairs. And the other unusual thing that's happening is, for the first time that I can remember, the 5-year fixed rates are actually pricing cheaper than the 2-year fixed rates. So normally you pay a bit more for that longer term peace of mind, knowing that your payments can't change for that longer period. And there's a certain value for people in that to know exactly what they're paying for that longer period of time. But it looks like the banks are taking the view that if nothing else happens, nothing else goes wrong, that the interest rates would continue to rise in the short term and then come down in the future. And that's why I think the 5-year fixed rates are pricing more competitively than the 2. But of course, it swings and roundabouts, because if you opt for that 5-year fixed rate now, you don't get the opportunity to remortgage in 2025 when rates may or may not be lower. Quite a confusing time, very difficult to explain, and probably even more difficult for the layman to understand. So please reach out for advice, and of course we're happy to help.